Well, 2025 has been a record-setting year for the cattle industry, but there's plenty of uncertainty about what next year may hold. To shed some light on the future of the cattle business, I spoke with Oklahoma State livestock market economist Dr. Derrell Peel at the Wyoming Stockgrowers Convention. First, I asked him, where are we at from a supply standpoint? Are we finally going to grow this cow herd again?
We may have a bottom in the herd size, although we haven't really confirmed that yet. But I think we're kind of stabilizing the beef cow herd at the current level, but that's based off of the fact that cow culling has decreased enough to hold us steady. In terms of herd growth, we still don't have any appreciable evidence that we are retaining enough heifers to put together any growth. So, I think going into 2026, we'll see a beef cow herd that's plus or minus unchanged from 2025. Might be fractionally higher, but certainly not going to indicate significant growth in 2026. And at this point, again, with the heifer situation, I don't think we're going to see much growth even in 2027.
So as we slowly start to rebuild cattle supplies, what does the downside price risk look like for producers?
We recognize now that the 2014 to 2019 expansion was historically rapid. It was a jackrabbit start, and it was because we had done some things to be ready for that. We have not done those things this time. We don't have a pipeline of replacement heifers. And this one is probably going to be historically slow. And so we're on a very slow paced path at this point. I think we're probably going to spend at least the rest of the decade in some sort of gradual path of slowly growing these numbers. Now, it could be that everybody gets the idea at the same time and we see a big burst at some point, but it sure doesn't look like it's happening right now, and I don't see it certainly for the next year or two at least.
Now, much has been made in the price rally over the last several years about tight supplies, but Derrell says that beef demand has also been key to supporting prices.
Demand is certainly a key. The lack of supply, I guess, is certainly a requirement for the high prices, but if you don't have the demand, you can't support that, and we have had that demand. At this point, we've been watching for signs of any sort of erosion in that demand profile. We just don't see it at this point. Consumer demand remains very robust. Now, certainly some consumers are making some adjustments in the mix of products and so on. And going forward, we're going to produce less beef. So some people are going to eat less beef, but they still want it and they're willing to pay for it. And so, with a smaller supply, we're going to see even higher beef prices because the market's going to figure out who wants it the most and who will pay the most. And I think we're going to continue to see that.
What about further up the supply chain? Low feed costs have certainly helped feed yards, but how are they positioned in this tight cattle supply environment?
As we've run up prices the last 3 years, feedlots could have had a lot of challenges because the calf and feeder prices have gone up faster than fed cattle, even though they're all a lot higher. So that feedlot margin could be tighter, but two things have helped them. One is the cost of gain has been coming down. The other one is we've extended days on feed, so they've slowed down the turnover rate. And so they haven't really seen that squeeze take a hold yet. But I think going forward, they're going to have more challenges, I think. And we're beginning to see it kind of now, where feedlots will probably share a little bit more of that margin squeeze. Packers have taken the brunt of it up to this point. Feedlots will share in it. And on the other end of things, I think the retailers will share more in it as we go forward with tighter beef supplies.
We'll hear from Derrell on packing capacity, screwworms, and political risk after a word from our sponsor.
From the beginning, we've worked closely with farmers. BNSF's ties to the agricultural community go back 175 years. Together, we've innovated to make the U.S. agriculture supply chain one of the most efficient and productive in the world. Our strong relationship powers BNSF still today and helps us move the nation like no one else can. At BNSF, we move the nation for you.
As we think about the future of the cattle industry right now, there's a lot of questions about packing capacity. I asked Oklahoma State livestock market economist Derrell Peel, how does the shutdown of the Tyson packing plant in Nebraska affect the outlook for the industry?
It wasn't really a surprise that we would see somebody. We knew there was a time limit on how long the packers could hold out. Nobody wants to give up market share, but at some point in time, you got to make a decision. The Tyson announcement reduces overall capacity, but it doesn't remove the excess capacity. We're so tight on cattle numbers, and we're going to get tighter going forward. So we're going to continue to have basically the same excess capacity situation that we've had. Don't think it's going to change things a great deal other than obviously in the regions, particularly around Lexington where that plant closes. There'll be some regional shifts that will take a few weeks, maybe a few months to kind of sort out. But again, the demand in total will be there for those cattle. Packers are still going to be chasing cattle for the foreseeable future.
Cattle producers have been eyeing the screwworm situation in Mexico very closely, so I asked Derrell, from a market perspective, how could screwworms affect the U.S. cattle industry?
The border will probably reopen at some point. Part of that discussion is political in nature, but part of it is hopefully veterinary driven and epidemiological driven, but it's probably going to happen. And you know, the market will initially react to the fear of what's backed up down in Mexico and so on. I don't think it's a major issue long term from that standpoint. If the screwworm fly actually winds up in the U.S., same deal. There'll be a big psychological reaction initially, but honestly, I don't think it changes the market situation very much. Screwworm flies are a huge management headache more than anything. So the producers in the region where it happens are going to face a tremendous amount of costs to manage it, to deal with it. And so I don't think it would change the overall supply and demand situation in the industry as much as it would just change the costs for the folks that are most directly affected and indirectly for the whole industry.
Lastly, Derrell says that political risk continues to be one of the biggest threats to our industry.
With the political focus on food cost, and specifically beef prices have kind of become the poster child for high food costs and you know, questions of affordability for consumers. So I think we're probably going to stay in the spotlight from a political standpoint. You know, there's nothing that anybody can do to change that, but politicians, being politicians, are going to look for anything they can do. They're going to make lots of noise, lots of statements. All of those things are probably going to contribute to continued uncertainty and volatility in the market, and I'm afraid that's just something we're going to have to live with for the foreseeable future.
Well, appreciate those insights from Derrell. There is a lot of uncertainty, but the outlook does remain pretty bright for cattle producers. For the Northern Ag Network, I'm Colter Brown.